You've done the research. You've picked a solid project. You've even timed your entry perfectly. But then the market does what it does. A sea of red candles. Your portfolio is bleeding out, and that cold, familiar feeling creeps in. Panic. You sell. And of course, the next day the market rips back up, leaving you in the dust. Or maybe you're on the other side. You're up 50%, but you don't take profits. Greed whispers in your ear, "This is it, the moonshot." Then a whale dumps their bags and your gains evaporate in minutes. If any of this sounds familiar, congratulations. You're not a bad trader. You're just human. The biggest battle in crypto trading isn't against the market. It's against the 1.4 kilograms of wrinkled meat between your ears, your brain. This is the high-stakes world of crypto trading psychology. And today, we're going to deconstruct the mental traps that are costing you money and give you the psychological toolkit to navigate the chaos like a pro. So what's really going on in our heads when we trade crypto? It's a cocktail of primal emotions that were great for surviving on the savannah, but are disastrous for navigating the digital frontier of finance. First up, the two big bosses of bad decisions: fear and greed. They're the yin and yang of your portfolio's destruction. Fear is what makes you sell the bottom. It's that voice screaming, "Get out now before it goes to zero." This is driven by loss aversion, the psychological principle that the pain of losing is twice as powerful as the pleasure of winning. Think of it like this. Dropping a $100 bill feels way worse than the joy you get from finding a $100 bill. Your brain is hardwired to avoid that pain, even if it means making an irrational decision. Then there's greed's favorite child, FOMO, or the fear of missing out. You see a coin pumping 300% in a day. Everyone on Twitter is a genius. You feel that itch, that desperate need to jump on the rocket before it leaves without you. So you ape in at the top, right as the early investors are cashing out. You become their exit liquidity. But it's not just fear and greed. There are more subtle cognitive biases at play. Ever heard of confirmation bias? This is when you only seek out information that confirms what you already believe. You're bullish on a coin, so you only watch the YouTubers who are also bullish. You ignore the red flags, the critical analysis, the dissenting opinions. It's like putting on blinders. You create an echo chamber that reinforces your bias right up until the point of liquidation. And let's not forget the narrative fallacy. Humans love stories. We crave a simple explanation for complex events. This coin is going up because of this partnership, or this is the next big thing because the tech is revolutionary. We create these stories to make sense of the randomness of the market. But the hard truth is, most of the time, the market is just chaotic. Price goes up, price goes down. The story is what we tell ourselves to feel in control. So how do we fight back? How do we upgrade our mental software? First, you need a plan. A trading plan is your constitution. It's a set of rules you create when you are calm and rational that you must follow when you are emotional and irrational. Your plan should define your entry and exit points, your position sizing, and most importantly, your stop loss. A stop loss is your predetermined point of surrender. It's you in a moment of clarity telling your future emotional self, "This is the point where we admit we were wrong and live to fight another day." Second, practice mindfulness. I know, it sounds like some new age fluff, but it's not. Mindfulness is simply about observing your emotions without judgment. When you feel that surge of FOMO, don't just react. Acknowledge it. There's that feeling of wanting to ape in. By naming it, you create a space between the emotion and your action. And in that space lies your power to make a rational choice. Third, keep a trading journal. Document every trade, not just the numbers, but your feelings. I felt greedy on this trade. I panic sold this one. Over time, you'll see your patterns. You'll see the triggers that lead to your worst decisions. A trading journal is the replay footage of your own psychological game. Finally, zoom out. The crypto market is incredibly noisy on the short-term charts. The 5-minute chart is pure chaos. But when you zoom out to the daily or weekly chart, a clearer picture emerges. The same is true for your portfolio. Don't check it every 5 minutes. It's like pulling a plant out of the soil every day to see if the roots are growing. Have a long-term perspective. Look, mastering the psychology of trading isn't about eliminating emotions. It's about managing them. It's about building a system that protects you from your own worst instincts. It's the difference between gambling and investing, between getting wrecked and building real generational wealth. The market is the arena. Your capital is your gladiator, but you are in the stands, making the decisions. Don't let your emotions be the emperor that gives the thumbs down to your portfolio. So, what do you think? What's the biggest psychological battle you face when trading crypto? Is it FOMO? Panic selling? Let me know in the comments below. Let's start a conversation and help each other become better traders.